Welcome back to the NJCPA Tech Talk podcast, brought to you by the Emerging Technologies Interest Group. I'm your host, Sean Stein Smith, and we are back today. We are in double digits, episode 1111. We are back. And so I'm very excited for our conversation here today. I have an excellent guest with me here today on the podcast, and I'll introduce him in a moment, but just a quick bit of background about me, just in case you aren't familiar with me at this point in time, although probably the bulk of you have heard me, talked to me, had to deal with me, either at a conference, at a firm, in person, online, all the rest. I do a ton of work. I'm Sean Stein Smith. I do a ton of work in the emerging tech space, blockchain, crypto, RPA type things. I'm all over the place doing corporate trainings, books, podcasts, articles, all of that good stuff. But enough on me. I'm thrilled today to have on as the podcast guest, NJCPA TechTalk podcast, Karolis Matulis, who is a manager at WilkinGuttenplan, where he also chairs their Innovation Council. He's won awards out of the NJCPA, and he's a tax expert. So I'm happy to have him here today. And he's also a blockchain crypto enthusiast. Welcome to the podcast.
Awesome. Thanks for the great intro, Sean. It's good to be here. A little bit about myself. I'm a manager at WilkinGuttenplan. I dabble in taxes, estate planning, valuation services, and really kind of the focus lately has been, the innovation train, kind of streamlining processes, RPAs, data analytics, data science type of services. And I think crypto is kind of an interesting culmination of all of these different fields, just because I view, blockchain as a big data problem. So it's an interesting kind of blend of all worlds.
Awesome stuff. And yes, I would argue that everything crypto is a opportunity, but it's also a challenge in terms of how to harness the data, work with it, all the rest. But to try to sort of have our conversation, right, so to get underway here, could you give us a background and a briefing as to the trends and the topics going on at the local state level? So are there any pressing issues out there right now?
So local taxes, I think, are a difficult issue because most states kind of follow the guidance of the IRS as it pertains to how they're going to treat particular types of income. Most state codes are really just based on let's do whatever the IRS does, unless we explicitly say otherwise, conformance, non-conformance. So for the most part, the local tax issue, I think, is pretty minimal compared to what's going on at the federal level, because the federal level and, the IRS guidance is pretty thin. So a lot of times, we as professionals really just have to take in everything that's available to us, which isn't much, and kind of take a look at the technology and the product that we're dealing with, and make a best determination that we can based on the facts and circumstances on how do we treat a lot of the crypto assets. The one thing that's kind of going on the federal level is obviously the infrastructure bill. This morning I was taking a look at the Build Back Better Act. The text of it was from October 28th. There's some things in there, and a few months ago we had some stuff in the infrastructure bill as it pertained to I would think 1099s and that sort of thing. What's found in this new bill really deals with constructive sales, modification of the constructive sales rules of section 1259 with the addition of digital assets. And I think another one that's has been a pretty popular topic for folks to discuss in the crypto community is the wash sale rules. So it seems that the current version of the infrastructure bill has a modification to section 1091 for digital assets as well. I think they're really trying to cut off that opportunity before it develops a lot further. So that's really, I think, what I'm most interested in at this point is because, federal is going to determine all the state treatments and the local treatments. So if we can get a good understanding of that, we can get a good understanding of local taxes, or we can begin to attempt to figure out how some of these fit into the local and state.
Excellent points there. And so are there any common questions or common concerns, common issues that you and your colleagues are currently dealing with around either crypto taxes or just sort of regular tax issues overall?
Yeah, so I think some of the, everybody is trying to get an understanding how the crypto tax world works. The guidance from the IRS really points us towards the digital asset class being, in the eyes of the Internal Revenue Code, an asset. So we're basically going to be applying all of the rules that we apply to asset transactions to digital assets. With that, there's kind of a lot of, I don't want to say gray areas, but there's a lot of confusion because the crypto assets don't really look and behave like a lot of other traditional assets that we're used to dealing with. So it raises a lot of questions of how do we report this? Can we utilize something like the wash sales rules? I think there's a case that could have been made for wash sales if the infrastructure bill passes some of the language here. I think that's going to be going out the window. I think folks are kind of thinking about tax planning, and really it's just a question of what is somebody's involvement with crypto. Some folks are participating in full out mining and staking, and the tax answer on those types of activities I think is going to look a lot different than, for example, going on your local exchange and locking Ethereum up in a staking contract by the exchange. So you're not physically kind of doing that on your own. The exchange is performing that service for you. So then the question becomes, does that rise to a level of trade or business in the same way that staking on your own would?
No, and I would say that honestly, the whole conversation on crypto and on taxes linked to crypto has really evolved so quickly, right? During 2020 and then the current year 21, it honestly has moved really far beyond basically trying to figure out how much you owe to honestly trying to figure out what type of income even, right? Because depending on how certain transactions are actually built out and actually completed, right? There are types of income classified as ordinary income, and there are other transactions in that same ecosystem who could be classified as a cap gain. So, I mean, there are plenty of open items out there. Probably the best word that I would use to try to add some context to it is there's a lot of ambiguity still out there. But in terms of the bills out there, right, down in Washington, whether it's Build Back Better, the hard infrastructure bill that is being argued, are there any signs, are there any indications on your end from the folks that you talk to of any of these bills actually passing? And if they do pass, are they going to pass before the end of the year?
Yeah, so I think that would be an exercise in reading tea leaves, but I think my take
come on,
yeah,
come on, just a little bit.
We are here to chat, so we can certainly talk about it. My sense is something will get done. It's just a question of when. I think as it pertains to crypto, that area is particularly interesting because I think when we kind of got the first version of the crypto bill, and there was some language in there that really I think was kind of steering the exchanges towards the broker definition, which I think would have implied the need for them to issue 1099s. I think there was a lot of outcry from the blockchain community, basically, implying that Congress was trying to strangle this this baby, this crypto technology in the crib. So I don't know if I would kind of go to that extreme level of, this is going to really hamper the technology. But as a tax CPA, I think some level of 1099 reporting would probably be on my wish list to really, I think, make it easier for us as tax accountants to service our clients, because a lot of times folks are not really aware of the fact that they need to be reporting anything, and the sign of I didn't get a form for them is kind of a free pass to say, you know what, this is not a taxable transaction because I didn't get a 1099. Obviously, I think it gets very, very difficult once you leave the traditional exchanges, because I think the 1099 requirements are really going to break down once you get into kind of this new age of technology where you have decentralized exchanges and you're really not even sure who you're transacting with. So I don't know who would be issuing a 1099 in those scenarios, but I think for the Coinbases and Gemini, Kraken, I would think that 1099s are in the making. If not, this coming year, probably shortly after. Going back, kind of looking at some of the old guidance that the IRS has issued, even the 2014 notice, I believe, had language in there that if you pay somebody over $600 in crypto for services, you should be issuing a 1099 miscellaneous to them for those services rendered. So I feel like a lot of this stuff is not exactly new, but a lot of folks were definitely outraged about it, thinking that it was kind of an overreach. I don't know what your take on 1099s is. They're certainly not a very sexy or exciting topic.
Oh, come on, man. They absolutely are. But I would say that yeah, I mean, if at any point, right, either hopefully prior to year end, but even in early 22, if there could be some consistency in terms of actually who has to issue investor documentation or consumer documentation to investors, to users, to vendors, that would actually certainly help. But there is also the other issue, right? That it's a whole other conversation if you are talking to actual companies like Gemini, Coinbase, who is a publicly traded entity, Kraken, and then other sort of DeFi networks who have no corporate headquarters, who have no corporate entity at all. And so it really is, I think, ultimately going to come down to where the guidelines go that actually make this easier are going to be where the average retail investor is going to end up going, right? Because most investors, be they individuals, institutions, don't want to add any extra risk in terms of compliance or tax audit risk. And so I believe that on the one hand, having some sort of guidelines and clear, transparent rules are going to help the industry grow. Now, I do know that there are some people out there who would argue the opposite. So it's always a balance between regulation and innovation. And it's a very tight line to walk right now. But if there can be some baseline rules, at least, I do believe that'll help the industry grow overall, and then help us as individual firms or individuals operating out there actually be able to help our clients better.
Yeah, I think a lot of folks that ran into crypto transactions over the past year on their as they were prepping their clients' tax returns really were probably facing this type of reporting for the first time, and it didn't really come in any standardized form. And I think a lot of professionals didn't really even know where to start. Here's an export of the transaction detail from Coinbase. What do I do next? What does all this mean? So I do think some type of standardization in the industry is definitely going to help it kind of move forward. And interestingly enough, I think there's still a different varying level of comfort that folks have. I've spoken with some folks that are interested in the asset class, but are not particularly interested in owning the asset class directly, going to these exchanges. They feel much more comfortable, going the ETF route. To them, that's a much more traditional investment, and it has, I think, much more of an SEC blessing, at least in their mind. And it really does a good job of dealing with the headache of reporting, because, reporting an ETF transaction is much easier than reporting transactions that are kind of happening on the blockchain. I don't know what your experience with this is, but with all of the yield farming and all that type of activity, to me, that just seems like a reporting nightmare, and it certainly becomes, like, I think, a big data problem. I don't know what the answer to that is. I'm hopeful that there's going to be some tools that are going to help CPAs kind of deal with that issue, because I think otherwise compliance costs are going to be through the roof, to the point where it doesn't even make sense to attempt to reconcile all of the transactions.
No, and so in any conversations or engagement that I'm having, either individually or with firms, as DeFi and NFTs and yield farming and staking and all of that has grown tremendously during 2021. I mean, now at the end of the year, there are questions. Well, so I had all of these gains during the year, did well during the year. How do I make sure that, one, I'm covered, and two, that after the fact, I don't get audited, right? Because all of us have seen that now the IRS is going back to Coinbase, Kraken, Circle, going all the way back to 2017, 2016, asking for records and data on those investors all the way back then. So yeah, I mean, there is going to be, I believe, a huge headache in terms of tax prep and tax compliance as we go forward. And the whole meme coin trend right now isn't helping either. Dogecoin, Shiba, and the coin based on Squid Game, all of that is not helping. And it's also important to keep in mind that all of us hear about it, see it. The IRS is also hearing about this too, and the asset class itself is about $2.5 trillion right now. So it's a real asset class, and there's real money here, both for investors and for the IRS. And so in terms of sort of where individuals, where firms, where other CPAs could try to learn more on these topics, are there any resources or outlets that are of good use to you and your firm?
Yeah, so I think that's kind of
outside of you, obviously, right? You're the expert.
It's
go-to guy.
It's a loaded question, but I would probably start by getting familiar with the IRS guidance that's out there, and I think the two. Let me make sure I have my citations correct. Notice 2014-21, and I think there's a 2019 kind of rev ruling, or some sort of communication from the IRS that really dictates how these things should be treated. It goes through, this is an asset, as far as hard forks and all that sort of thing, that's all covered in there. But I think we're really at a point where a lot of the things that we're seeing this year, they really don't fit into the boxes that we traditionally had. The NFTs, the yield farming, they're somewhat of a different line of, I guess, technology. So my best, I think, advice as far as CPAs learning about the tax aspect, we understand the tax code, we kind of understand that, but to do well in terms of crypto taxes, I think you really have to understand the technology. And that's really the key, because the contracts that are being deployed on some of these, contract-based blockchains like Ethereum or Cardano or whatever else it might be, really, I think each contract, this is my personal opinion, each contract has kind of a different rule set. And for tax purposes, probably has a different treatment based on what it is that that contract accomplishes and how that contract works. So maybe this is a bad answer, but without fully understanding the technology and fully understanding what's happening in this contract, it is very difficult to opine on what the tax treatment of a particular transaction is if you don't really have a good background of what's actually happening behind the scenes. What are the economics of the transaction here? What are the risks and what are the rewards? And how does that fit into, the traditional tax code that we have? What section of the code should we be looking at to describe this transaction? Because I think the addition, this was particularly surprising to me, the constructive sales rules. These are the rules that deal with short sales, forward contracts, something that I just saw today, and I haven't had a chance to look into it, offsetting notional principal contracts. So there's a whole lot of complexity, and a contract could be doing one of these things. And now all of a sudden, if the infrastructure bill passes with, the changes to the constructive sales rules in place, now all of a sudden you have a whole bunch of other things being pulled in as being applicable to this technology that was not applicable or not necessarily explicitly applicable. So without understanding the technology, you really can't start applying some of these rules.
Excellent points there, and also they echo any advice that I always try to give, is that the absolute first place to start is you have to understand the transaction and the assets actually being talked about, right? Because every crypto coin, token, NFT, DeFi operation, contractual execution all operate differently, and all of that is just part of how fast growing the whole blockchain crypto asset space has been. But the absolute first place to start is to understand all of that. And so if I could ask you for sort of one short little piece of advice, like a 30-second soundbite, as to how to best help clients tax plan. And I know trying to condense all that into half a minute is a hard ask, but I'm gonna do it anyway. One sort of short half-minute piece of advice to help clients tax plan if they have tax questions linked to crypto. How'd you answer that?
I think the single most probably effective thing for folks that are just kind of dealing in buying and selling, outside of the traditional advice of accelerate expenses and defer revenues, if you're kind of playing in that side of the pool, and the buying and selling side of the pool, I think my personal advice would definitely be utilize kind of specific lots, because you're able to designate lots that you're selling. So if you're not liquidating a position in full, you can certainly generate some losses, even if your overall position is a net gain, depending on what it is that you acquired a particular type of currency. So it's really just facts and circumstances. You got to take a look at your chessboard. You got to take a look at your pieces, and you got to figure out how to best move them to get yourself in the best position for the end of the year.
Excellent points all around. And
what's your one bit of advice for tax planning?
Well, hold on here. It's my podcast. I get to ask the questions. No, I'm kidding.
Very good.
I would say no. And honestly, it all depends on the facts and the circumstances, right? And that, if at all possible, try to get as much documentation as you possibly can around your holdings, your transactions, and then how those assets actually operate, right? Because the IRS sure has the 2014 ruling, 2019 revenue ruling, and their FAQs that are being updated as we speak. So So it's always important to have that in mind too. But the best piece of advice that I always give is to have documentations, to have the backup, and to understand actually the underlying nature of the transactions themselves, right? Because it's awfully easy to get lost or overwhelmed in the weeds, right? With Dogecoin and Bitcoin, yield farming, staking, pools, NFTs, borrowing, lending, ETH for Bitcoin, wrapping Bitcoin, all the rest. But ultimately, it's all comes down to: is there a business or economic event happening? Is there a transaction happening? And then how to best track the basis, gains, and any losses of those economic transactions. But
well said.
Thank you. But it was an absolute blast having you here today on the podcast, and I'm going to have you on if and when any of these bills are actually passed. So I will definitely have you back on. It was a blast having you on today.
Absolutely.
Thank you again.
This was a great time. I appreciate the invite. I do look forward to coming back because this stuff is exciting to me. So I can talk about it all day.
Absolutely, man. Me too. So just a few quick housekeeping items here at the end. Be sure to subscribe to the NJCPA Tech Talk podcast in your favorite podcasting app. We're also on YouTube at youtube.com/NJCPA. Also online at njcpa.org/Tech Talk. And for any of you out there who are NJCPA members, hopefully all of you, you should always, if you aren't now, you should definitely join the Emerging Technologies Interest Group at njcpa.org/groups. But we have actually one more thing. In January 2022, the NJCPA Tech Talk podcast is actually going to be merged with the NJCPA Issues Watch podcast. Don't worry, I'll still be there. Then you'll have access to all of the tech-related content that has previously been covered here. And on top of all of the other great content, audit stuff, politics, all the rest being talked about on the Issues Watch podcast. So if you are not already, sign up for the Issues Watch podcast in your favorite podcasting app, or on our NJCPA channels on YouTube, or at njcpa.org. And all of that's coming in January 2022. I'm excited for it. Hope you all are too. And see you all next time.